The Ottawa real estate market, it's not crashing, it's recalibrating.
Moving forward with the Dekker team. Moving forward together with the Dekker team.
We are enthused that we've created for you free access to 745 Life's Inside Track episodes, where we share insider tips, making house home, building wealth wisely through real estate. And great news is, YouTube channel, podcasts, chri.ca, you can go just about anywhere to either watch or listen to the 745 episodes with 3 segments each. Crazy.
Mm-hmm.
The market, we keep hearing doom and gloom. And part of that is from the Toronto market.
Yeah, it's such a huge market. It overshadows
Ottawa.
Ontario. Well, not just Ottawa, but Ontario,
Correct.
period. So if Toronto's way down, all the media is doom and gloom and the prices are falling, the sky is falling. And it's kind of true in Toronto, especially in the condo market. We were down there at a networking meeting with a bunch of our fellow realtors.
Yeah, that we've been part of since 94.
Mm-hmm. And we refer business back and forth all down that corridor from Windsor to Ottawa between these realtors. And it's been a great relationship. We've helped a lot of clients and they've helped a lot of our clients. Now, Toronto, I was talking with them and I said, well, how do you price a condominium right now? Because even the builders, to get rid of their condos, they're selling them below cost.
Yeah.
Which is crazy. Now, crazy, it's the market there, right? And on top of that, the realtors were saying, oh, we compare to 2018 prices. So like they've blown way past all the gains of COVID and all that market, and they're pricing their condos at 2018 prices. So is there an opportunity in Toronto? Probably, yeah.
Probably. Has it hit bottom? We don't know.
No.
They don't know. We don't know. And part of it is they built so many that there's more supply than there is demand.
Yeah, well, thanks to immigration rules where there was huge influx, then they turned that tap off. And now they're saying build, and we've built and we're trying to build more. And at some point, I think we had negative increase in population in 1 or 2 months this year. And so that is going to cause actually too much inventory, right?
Exactly.
But let's go back to
Ottawa because I like Ottawa because that's our area, that's our niche, that's our area of expertise. Mm-hmm. So the average sale price.
Hold on 1 second. I got a picture in my mind.
Okay.
Have you ever seen where you're driving along and you see the clouds and rain and sun in another section, and you actually drive through it? You can drive out of the rain into the sun. There's like that division mark.
Uh-huh.
Well, that's like Toronto. It's that big storm cloud there.
Oh.
And Ottawa's kind of over here. We've got mostly sunny with a little bit of cloud.
A little bit of cloud.
Okay.
And our average sale price, average, has gone up 1% from last year. You're thinking, well, that's good news. So my house will sell for more this year than it did last year. Whoa, that's not quite the truth.
Yeah, the average is very deceiving.
The average is deceiving because of a number of large homes sell, that drives up the average. If we look at the benchmark pricing, if we took the same house this year as that sold last year, just sold it 12 months apart, it's probably down about 2.1%. So whereas the buyers have opportunity, the sellers have an opportunity to be a little more realistic. No, it's true because the prices are not increasing right now in the Ottawa market. The great news is it's a very stable market. So what it allows the buyers and the sellers to do is have a little more time, consider more properties because inventory's up about 10%, which is still, if you look at a 10 or 15 year average, still not crazy. It's not through the roof. We're looking at about 3.3 months worth of inventory.
Yeah.
We call that absorption rate. Do you want to explain it?
Absolutely. But just being a little nostalgic, do you remember in 94, 95,
96,
96, where inventory levels were 5,000 to 7,000 homes for sale?
Yeah, I do remember
And
that.
sales were quite a bit lower. Now we're at 3,578 at the end of March. So not that huge amount, but enough. It's 10% over the previous year and probably a lot over the previous year.
Yep.
Okay. But it's still 3.3 months of inventory. That means if at the current rate of sales, if no other property came up for sale, that amount of inventory would be 100% gone in 3.3 months.
Right. And there'll be new homes come on the market. And we've got a delayed spring market this year. I think the weather had something to do with it. And we've had a delayed spring surge, right? It's really, usually it peaks out in April, May. And now we're peaking out hopefully in May, June. Sometimes it really gets robust already in February, March. That wasn't the case this year.
Mm-hmm.
So when we have about 3 months of inventory all the way up to 5, we consider that a balanced market.
Yeah,
It's not extremely advantageous for either party, the seller or the buyer. It's where there is really adequate time for the most part. Doesn't mean we're not seeing some multiple offers. We're sometimes seeing 2, 3, or 4. We're not generally seeing 10, 12, or 15 anymore, which is kind of nice because that was mayhem at its best. So we're still seeing that if it's priced really well. We're seeing, if you watch the market, if you've been in there and you've been looking, you'll have noticed that there's a lot of price adjustments. And that's usually because people are pricing beyond what the prices indicate they should be. It doesn't mean they were crazy out to lunch. They just priced for an increase that isn't really happening.
Yeah.
In the Ottawa market.
I agree with that. And you know, that thing about the 3 months inventory, we're going to talk about that a little bit, 3.3, more in the next segment, because that 3.3 is similar to, that's an average, similar to the benchmark pricing. You really need to see what's the inventory in the type of property. Like there's more in condo than there is in townhomes.
And there's more in townhomes than there is in freehold inventory.
Inventory of townhomes is lower than inventory of freehold singles as far as months of supply.
Right.
But not much difference. And the point here is that that's where you need clarity. That's where we come in, because you give us a call, you talk to us about your address, your type of home, and we can do the analysis as to whether that's on its way up, it's on its way down, what the current pricing is. Clarity call for that.
Yeah, and really what we want you to do as we move into the next segment is think about stability, not volatility. I think a lot of times this whole energy, we talked about interest rates, and now we're talking about quantity of homes on the market and how many are selling, and it creates a sense of volatility. Reminder, stability is actually the key word here.
And we're glad that you're listening, because we just love clarifying your options, because when your options are clear, your wisdom will flow.
Moving forward with the Dekker team. Moving forward together with the Dekker team.